Good morning, ladies and gentlemen. Welcome to the Falcon Oil and Gas Limited Investor Q&A session. Throughout this recorded meeting, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. If you could please hold off submitting your questions until the team have addressed those that were pre-submitted, just to avoid any duplication, that would be most appreciated by the company. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions that are submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to CEO Philip Quigley. Good morning, sir.
Good morning, Jake, and thank you. And good morning, everybody. And especially thanks to those who could join the call this morning on such short notice. We normally like to give shareholders a couple of days at least advance notice of an investor meet. But on the basis of this press release this morning in particular, it's not our usual operational update. I thought it'd be a good opportunity to give people a better idea of what this press release we announced this morning in terms of a letter of intent having been signed with Tambaran and Sheffield. And really what that's all about is, as you may have remembered, back in around the 19th of September, Origin announced that they were exiting the Beetaloo, and they're doing so by selling their entire 77.5% interest to a company called Tambaran B1. And then we announced that ourselves, saying that, look, see the announcement, and please note we have preemption rights. So we worked on those preemption rights and all efforts towards preempting the deal over the last number of weeks. And during that process, then there was an opportunity to come up with an alternative to doing a preemption, which resulted in this letter of intent that was executed last night, which of course then we announced this morning. So I think there's a number of good questions on the press release, which if I kind of hand back to Jake, maybe to run through those, and we can kind of maybe give some clarity and some color and context of what really is this letter of intent all about. So back over to you, Jake, please.
Philip, that's great. Thank you very much for that. And obviously, as you did just kindly mention, we did receive a number of pre-submitted questions ahead of today's event. So perhaps before turning to those live ones, if we could take these. The first pre-submitted question that we have here reads as follows. Can you tell us a bit more about who the other parties to the letter of intent are?
Yeah, so there are two parties really. One is Sheffield Holdings, which is represented by Brian Sheffield. And Brian came in as a 9% shareholder in Falcon earlier this year. And he's also an investor in Empire and an investor in Tambaran Resources. So he's heavily invested in the Beetaloo. Brian is the founding of Parsley Energy, a company which he built up from about 2008, 2009, and sold it last year for 7.5 billion. So he's rated as a very, very successful shale investor in the US. And then the other party, as I mentioned, is Tambaran Resources. And Tambaran, as most people might know, are already in the Beetaloo. They're in the Beetaloo in partnership with Santos, and also they have their own Acreage 136, which they've just completed actually a very successful vertical well on in the last few days.
Philip, thank you very much for that. And perhaps a related question that we have here reads as follows. Why is Falcon entering into an LOI with Sheffield and Tambaran?
Yeah, so as I said, Sheffield and Tambaran, they own 50% of a company called Tambaran B1. And that's the company that agreed to deal with Origin Energy a few weeks ago to acquire its 77.5% interest in what effectively is our JV in the Beetaloo Basin. And under the terms of that, our JOA with Origin, we have preemption rights. And as I said at the outset, we were working on a plan to execute those rights over the last few weeks. And then discussions opened up between Falcon and Sheffield while we were going through the whole preemption process that then led and gave rise to an LOI being entered into instead of us proceeding with the preemption itself.
Thank you very much for that. And I know you've just touched on preemption, but perhaps a bit more colour here. How close was Falcon to concluding a preemption deal before entering discussions with Sheffield?
Yeah, good question. I kind of got a call on that probably every day from shareholders. How's it going? Are you going to preempt? And of course, I couldn't comment on any of them. But look, to be honest, since the deal between Origin and Tambaran was announced on the 19th, Falcon's board of management literally working around the clock on a preemption deal, which would have involved, raising equity in the market, but also bringing in a strategic third partner of our own. And discussions were advancing pretty well on both fronts up until, negotiations opened up with Sheffield just over a week ago. But yeah, we were making some pretty good headway on it. But as I said, negotiations started about 7-8 days ago, which resulted then in this LOI being executed instead.
Perfect. And I guess quite a big question here. What's in it for Falcon by signing the LOI?
Yeah, that is a big question. A lot, and probably a lot more, which is why we're doing this investor meet this morning. I think a lot more than meets the eye, literally, in what you read in the press release. There's a lot in it for Falcon. We believe it's a really, really great deal for Falcon shareholders. When you read the press release, the first thing will probably jump out at you is the extra $30 million carry. But that's only a piece of the overall deal that we've negotiated, because the really important thing we've negotiated are what's called proration units, and they're limited proration units based on sole risk operations. Now, these are probably concepts which are not familiar to people who are not in the oil and gas industry, but I think I see a few other questions on these, so I'll address, the issues around what is a proration unit and sole risk operation further on.
Thank you very much for that. And perhaps turning on to the next pre-submitted question we have here. I see you negotiated an additional carry-on of $30 million on future wells as part of the deal. When does this new carry start applying?
Yeah, so first of all, remember, we still have a carry under the original deal with Origin. And our focus right now is on the drilling of these 2 stage 3 wells, which we expect to start drilling on those in the next couple of weeks. Once they are completed and tested by, let's say, the end of Q1, the new JV partners of ourselves, Tambaran and Sheffield, will look to the future of the drilling program, which hopefully will be a much more aggressive one, bringing in the H&P rig from the US, as was announced by Tambaran back last September. And the $30 million new carry that we're getting is split roughly 50-50. It's not all in one well, so it's 50-50. 50% will be on that first well we drill once we've completed this stage 3. And then 50% of it will be on a well that we drill anytime past June of 2024. So it's a split carry of 30 million, 15 million effectively next year and 15 million in 2024.
That's great, Philip. And turning on to another pre-submitted question we have here. Can you explain what a proration unit and sole risk is, and how do they work?
Yeah, this is the big question, and this is kind of one of the main reasons of doing this investor meet this morning, to get people to understand, hopefully, a bit more around the real value of the letter of intent that we've executed. So let me just take the sole risk part of the question first, and how it applies to the new joint venture partnership of ourselves, Tambaran and Sheffield, once we've completed stage 3. So a sole risk operation is an operation that is carried out by fewer than all parties to the joint operating agreement. So for example, let's say Tambaran B1 proposes a well in June 23, and for whatever reason, Falcon decides it doesn't want to participate in that well. Then what happens is that well proceeds, but while it proceeds, a proration unit is created around that well. And under the terms of our LOI, it can be up to a maximum of 6,400 acres. So 640 acres is a square mile, so that's effectively equivalent to 10 square miles. Now, if we opt out of the well and the well comes in a gangbuster, we can always come back in. And there's usually a penalty for coming back in. You typically pay 2 to 3 times the cost to get back into the well. And then you carry on with your interest. But you don't have to come back in. We can stay out of that well, and then we're out of any future drilling and any production from drilling from that one proration unit of 6,400 acres. So I hope that goes to explaining some way of how this proration unit, it's not a new concept. It's a very common concept in oil and gas world, particularly in the US, and sole risk operations very common as well. It just might not be as familiar to people in looking at what Falcon has been doing in their JV with Origin for the last 9 years, because it was never an issue. We were just in for the whole 4.6 million acres. Now we're in a position where we have these very, very small proration units that if we decide not to participate, well, we're just out of 6,400 acres.
Thank you very much for that. And I believe you touched on this briefly, so perhaps a related question we have here. If there's any further colour that you could add to this, that would be great. Why would Falcon choose not to participate in all wells?
Well, firstly, I'm not suggesting that we wouldn't participate in all wells, but we do have an option, and that's the beauty of this letter of intent. We do have an option not to participate for whatever reason. So let's say, we don't like the geology of where they're drilling or proposing a new well, for example, or we don't like the costs of the drilling of this particular well for whatever reason. The cost might be at a level that we think are not justified, or we just simply want to preserve our capital for future wells. But the beauty of this is the optionality that Falcon has going forward to choose to participate or not to participate for whatever reason. So it's wonderful options that we've opened up, and it is not just for now, but it is for the future development of the Beetaloo.
Thank you very much. And again, just perhaps to expand on this a bit further, another question that we had that was pre-submitted reads as follows. Surely it's not a good idea to be excluded from the 6,400 acres every time a well is drilled that we do not participate in?
Yeah, but look, once a proration unit is created, any further wells drilled within that, proration unit, and don't forget it's 10 square miles. You could have a number of wells drilled in that. That doesn't create a new proration unit, or it doesn't increase the existing one. So it's not like every time a well is drilled, we don't participate, we lose 6,400. It's only if they step outside of an already created proration unit that we then have another decision to make. Will we, won't we participate in that? But in all reality, when you look at it being excluded from 6,400 for whatever reason, and it could be like June next year, it could be June the following year, you're only giving up participation in a tiny, less than 0.2% of the total acreage. So it's not like we're losing out. If you're in the Permian Basin in the US, you wouldn't dream of being excluded from 6,400 acres in an area that is a very highly prolific producing basin. You just wouldn't. But when you're in a frontier basin and you've got 4.6 million acres, 6,400 acres, it might seem like a lot if you're a farmer in County Meath, for example, in Ireland, or anywhere for that matter. But in a frontier basin of 4.6 million acres, it is something we can always consider whether we want to stay in or not. But we're not losing a huge amount by not participating.
Thank you very much for that. The next question that we have here reads as follows. Is Falcon's election to participate in a well an all or nothing?
Great question. And the answer is absolutely not. But I love the question because that's another beauty of the optionality we've created. So we're at 22.5%, but that doesn't mean we have to do 22.5% of everything. We can drop, for example, down to 10%. So if we decide, and I'm only just saying, if we decide in June and next year or what is proposed, and we feel better off staying at a 10% or going in at a 10% level, well, we can decide to go in at 10%, and then the other parties pick up the other 12.5%. So it's as I said, just creates an awful lot more optionality.
Perfect. And the second part to that question was, what happens in that case? Is that considered a sole risk operation, giving rise to the creation of a new Proration unit?
Yeah, so when I said about sole risks is an operation carried out by fewer than all parties, that same concept applies where it's fewer than all parties, not at the same percent. So yes is the answer. It would create a new proration unit. So if, for example, a well is proposed in a new area and we go down to 10%, we pay 10% of that well cost, and then we get 10% of production. And then any further wells drilled in that same proration unit that has then been created up to a max of 6,400, we can then participate at the 10% level going forward. But yes, it is creating a new proration unit, but we still stay in it at 10%. We're not out of that 6,400 acres now at all. We now have almost 50% of what we could have had if we go in at 10%.
And I guess just while we're on Proration unit, another question that we have here, if Falcon does not participate in a well and is excluded from operations in a Proration unit, how will it know whether operations are successful or not?
Yeah, that's a really good one, because what you don't want, information is very valuable. And if you're not participating in a play, how are you going to know how it's doing? Well, under the terms of our letter of intent, we actually will have access to all data. And I mean all data, every data around the drilling of the well, all the log data, all the production data, everything to do with it. And we'll actually have it on the exact same time as every other partner who's actually participating in the drilling of that well. So regardless of whether or not we participate in the drilling itself, we'll always have real-time, live-time data, which is a very, very useful thing to have access to, because that can inform our decisions whether to go back into that well after it's completed, whether we want to be drilling in the block right next to it, because we can see all of this data from the 6,400 acre unit right beside us. So yes, it's a great position to be in.
And another pre-submitted question that I can see there's a few questions coming in the live channel as well about this. If Falcon is only losing out on 6,400 acres every time a new well is drilled in a new Proration area, how much acreage could Falcon realistically lose over, say, the next 2 to 3 years?
Yeah, that's an interesting question. To be honest, we haven't really thought about that in terms of, well, one, in terms of losing anything or not participating. But let me just, if, for example, 10 wells were drilled, and this is 10 wells in 10 new areas, not 10 wells within one proration unit. So if you think like, every 10 square miles is a new well drilled, and you do that, let's say 10 times over the next 2 to 3 years, yeah, we'd lose out on 64,000 acres. Again, you wouldn't dream of doing that in the Permian Basin. I mean, you've got to remember, in the US Permian Basin, if you had 64,000 acres, you were king. You had a serious foothold in the Permian with that level of acreage. But in our case, 64,000 acres, call it losing out on. It's like it's 1.5% of our total acreage. But that basically answers the question. That's what we realistically could lose, but I don't plan on losing any of it. But again, that's the optionality we have.
And I guess just following on from that, would Falcon not be better off sitting on the fence for the next few years and see how things go, and also hopefully see significant reduction in the cost of wells in the Beetaloo?
Yeah, again, another really interesting question. Look, we're an oil and gas company. We're in the oil and gas business. We're in the Beetaloo to develop the Beetaloo and to benefit from its development. But again, if, as your question seems to suggest, if we're looking to prove up the acreage using, potentially hundreds of millions of dollars of other people's money instead of Falcon shareholders' money, it's something we certainly can consider. And like I said at the end of my press release this morning, we can tailor our participation to best preserve our capital while at the same time maximizing our optionality. And that's what this letter of intent is all about.
I know you were just talking about the press release, and the question here that says, you mentioned in your press release that the drilling of stage 3 wells will commence shortly. Can you be a bit more specific on this?
Yeah, my CFO hates me being specific about, putting timelines and dates and date stamping when we're going to spud a well. And look, it's always a moving target in spudding a well, especially in the Beetaloo. But rest assured, we fully really do expect the first well to spud before the end of October. I mean, I'm genuinely that should be spudding before the end of October. So that's going to be great news. And in addition to this announcement this morning, actually getting back drilling is really what it's all about. So end of October.
And I guess just turning on to the next question, I can see a few questions I think that have come in as well during the live Q&A as well. Falcon is still benefiting financially from the remainder of the carry. Can you please elaborate on this?
Yeah, sure. The first key thing to note is Origin leaving the Beetaloo has no impact whatsoever on Falcon's carry. So the balance of Falcon's carry is effectively being assumed by Tambaran B1. So we will continue to benefit financially from the remainder of that carry as if Origin was still there. Now, as we would have said over the course of the last 6 or 9 months, that carry, doesn't cover us to the full end of stage 3. It will run out eventually. I mean, it's been a great carry since, way back to 2014. But it will run out, and it'll probably run out in the next, few months. But bearing in mind, we still have $17 million cash in the balance sheet. So we're fully funded between the carry and cash in the balance sheet to complete, well beyond actually to complete stage 3, and then step into, if you like, the new drilling phase starting in, hopefully May, June of next year.
And I guess just following on from this, does this mean that Origin are completely out of the Beetaloo?
Yes, they are, as in they've sold out the whole 77.5%. Ourselves, along with lots of others, we thought they were looking at farming down a significant interest in the Beetaloo rather than actually exiting. But they've decided to exit completely. And they've done this, if you look at their own press release, they've done this to basically give them greater flexibility to allocate more capital towards what they call their new strategic priorities of growing cleaner energy solutions. Now, when I say they're out completely, they have at the same time negotiated a 10-year gas sales agreement with Tambaran B1 for future gas sales coming from the Beetaloo. And more importantly, they've created a brand new 5.5% royalty on Tambaran and Sheffield's 77.5% interest in the Beetaloo. So yes, they're out in terms of they've no future involvement, they've no future capital commitment, but they're not out in terms of the future potential of the Beetaloo, which obviously they still rate. In terms of doing a deal which was, $60 million cash, which was quite a low number in anyone's estimation, but a 5.5% royalty could be worth quite a significant amount of money over the next 20 years or so.
And perhaps just two final pre-submitted questions before then turning to those that were submitted during today's meeting. Falcon is still carried for the time being. It has $17 million in the bank. It has negotiated a new carry of 30 million and still has the option of sitting on the fence for the next 2 to 3 years. Does this mean that Falcon never has to raise money again?
Gosh, I wish that was the case. Look, as an E&P company, you'd never say, oh, we've never need to raise money again, especially when the P side of the E&P doesn't actually produce any revenue yet. But I like the question in the whole way it's structured. That yeah, we've got a lot of money in the bank. We're carried right now, not forever. We've got a new $30 million carry, and I guess yeah, we do have the optionality of sitting on the fence, but it's optionality. I mean, I'll never say we don't need money. Of course we do at some point in the future. But the beauty of this deal is, we can now decide when and how much we want to raise in the future without being ever put under pressure again, which is a great position to be in. And it just opens up, as I said, this whole optionality and being able to preserve our capital going forward and then tap the market when the time is right based on results, based on the market, based on lots of other things.
And I guess a really good question here, just to conclude the pre-submitted questions. Are there any other benefits arising out of this LOI that are not expressly covered in today's press release?
Nice one. Yeah, but it's not really LOI specific. But one of the immediate benefits we see from all of this is more out of Brian Sheffield and Sheffield Holdings, because they've got investments now in Falcon, 9%, Tambaran, I think they're up to 15%. They've got about 4 or 5% in Empire. So Sheffields they're invested all the way through the Beetaloo. And Brian is a major advocate for collaboration between all parties. And with this cross investment, there's going to be significant collaboration going forward. Certainly initially on a technical front, which is to everyone's benefit, because there's no land grabbing going on here. This is about kind of coming together and sharing knowledge and sharing technical information so we can all better do what we need to do to develop the Beetaloo. So that's a significant, benefit arising out of the evolution of Sheffield's investment in the Beetaloo, if you like, not specifically related to the letter of intent, but still a significant benefit going forward.
That's great. Philip, as you can see, we've also received a number of questions throughout today's meeting as well. Perhaps I could just hand back to you to run through that Q&A tab, respond to any questions where it's appropriate to do so. And then if I pick up from you at the end, that would be great.
Okay, so let me just read these. Why deal with Tambaran and not finding new partner to acquire Origin stake? This looks like a backdoor deal. Not really a backdoor deal. It's not at all. When we did an option to preempt, we decided not to. We felt this, even though we were proceeding and working on a preemption, it would have always been difficult. When we started negotiations on this letter of intent 8 or 9 days ago, and what we've got out of this is certainly not a backdoor deal. It's a very good deal for Falcon and its shareholders. So question from Anne M. Did you have any advance warning of the Origin exit, or were you blindsided? Origin, a very transparent company with us, great partner with us over the last, nearly 9 years now. And they flagged to us back, I think, in November last year, that they were looking to farm down. The exit was a little bit of a surprise to us. We always felt it was a farm down. We were hoping for, they'd still be in for 30% or 40%, but I wouldn't call it blindsided. And no, we didn't have warning that they were exiting completely, but I still wouldn't call it blindsided, and that we knew they were fully engaged in a farm out process. Next one, good one. The big question is, did Origin sell out because it became disenchanted with the prospects for the Beetaloo? Absolutely not. And there are 3 reasons I can say that, quite honestly. When you look at why they exited, they're in coal seam gas project, major coal seam gas. It chucks out a lot of cash flow to them. They wanted to devote that cash flow to investing in future transition, the energy transition. That's their mission. That's what they're on. They're very much into the green energy space. And rather than putting dollars back to work, exploration dollars, appraisal dollars back to work in the Beetaloo, they want to divert those dollars into greener, newer energy. But to say they're disenchanted with the prospects of the Beetaloo would actually go against the deal they actually struck in terms of, you know, the 60 million is kind of small change in what, when you compare to what they've spent. But you look at the royalty that negotiated as part of the deal. I mean, that royalty will be worth probably hundreds and hundreds of millions of dollars and even more into the future. So no, they're definitely not disenchanted with the prospects of the Beetaloo. Big question, yes. What about Beetaloo part of Falcon, expansion or divestment? I'm not sure I understand that question, but look, we're not looking to divest. On that, actually, I think maybe I'll just answer it in a slightly different way. We were always put ourselves up as a kind of company that will build and then exit at some point in the future. And I would have said it at the last investor meet, I think back in July or August, that since September results of last year, the exit strategy has kind of been taken off the table. This letter of intent takes it firmly off the table for the foreseeable future. So with the optionality we've now created going forward on proration units and sole risk options and everything else, we've no desire to exit, at least not for the foreseeable future. And that, I would say, you know, in the next 3 to 5 years, we can stay in this for as long as we need to create massive value for the shareholders. Next one is, what is expected well spacing in core Beetaloo development? How many wells would like to be within a proration unit? Good question. You know, let's take a pad in the center of a 10 square mile proration unit, and you could drill, you know, perhaps 6 wells off that pad, and you could drill 3,000 meter wells in any direction you wanted. You could probably cover, you know, the majority of our proration units with 6 wells. You know, if you work out the maths on that, 10 square miles is what, 3 miles across. So you might have to do a bit more than 6 wells. But what is the exact formula for coming back into a unit that becomes successful? Well, I didn't specifically get exact what it is. It's, you know, it typically can be 200%, 300%, 400% range. That's the norm in the US, and those kind of norms will be applied to the Beetaloo. So, for example, if a well costs, you know, for argument's sake, $30 million, and we're in for 22.5%, which, let's say, rounded numbers is, what is that, 6.75, and let's say there's a 300% penalty. We'd have to pay $20 million to come back into that well. You know, it's a big ask in terms of a shale play, particularly wells at this cost. So we're more focused on, you know, if we decided not to go in, what are we limiting ourselves from in the future, rather than looking to see can we come back into a well. Next one, I think, is, I understand the value of the option on the proration unit, but doesn't that presuppose that you see Tambaran taking non-commercial drilling decisions? Not at all. Gosh, no. I mean, I don't see Tambaran making, I mean, who would want to take non-commercial drilling decisions? They're the operator, they're in the driving seat. They'll propose wells that will be based on science and geology and lots of other good things, as well as a lot of commercial decisions going into them. We have the option to participate or not. It's not to say that they're going to make non-commercial drilling decisions. I mean, it could look very commercial to us. We just might choose not to go in or not to go in for 22.5%. That's not to do with the commerciality of the decision being made. That's just to do with us choosing, for example, to preserve our capital, or choosing not to participate at 22.5, or, you know, maybe the odd case we really don't like the geology in an area, or it might be kind of a new area, you know, in a few years' time, further down south in EP 117, for example, that we might want to stand back from the first few wells drilled in a first proration unit. So I wouldn't say it's a non-commercial. There might be some wells in the future, not in the immediate future, which might have a higher geological risk that we could choose to step back from. Next one I see is, when will the next well drilling start, and when would results of the drilling be expected? So, as I said, drilling starts, and this is the real key. I mean, the drilling of these 2 wells, letter of intent is great. The announcement is fantastic today. but the drilling is what it's all about. And drilling will commence by the end of October. We'll drill the first well. It's scheduled to be about a 1,000 meter, at least 1,000 meter horizontal. And then the rig will move straight onto the second well. Those 2 wells will get drilled. You know, we're in the kind of the October, November, I call it getting closer to the wet season. But the good thing is we're very close to highways, so we don't have wet weather issues as such, particularly in terms of logistics and infrastructure. And then those wells get completed, we'll frack them and then put them on production. You probably, at best at this stage, we probably won't get to see results, proper flow results, until the end of Q1 2023, which actually isn't that far away. Can you please confirm again that Falcon can buy back in at a penalty? Yes, we can buy back in at a penalty if we choose to. And that's an option we'll always have. You know, even if we go at 10%, for example. So actually, if we do a 10% one, that's actually slightly different. So let's say we go from 22.5, we opt to go in at 10%. Well, then we're actually at 10% going forward. But if the well that we chose, or any of the wells that we chose, to drop down to 10%, and if they then pay out in terms of production from that well to the people who took up our 12.5% to the level of the penalty, then the 12.5% actually reverts automatically to our ownership. So we don't have to pay the penalty, it gets paid for out of production. In the case where we actually just decide not to go into a well at all, yeah, look, we can always back in. But as I said, you know, 200 or 300 or 400% penalty just might not be worth it. And you might just say, look, we're not going to go into this proration unit. We'll sit on the sidelines on this one and we'll go into the next one. How does Falcon intend to sell its share of the gas from Amungi? Can this go into the Origin contract? Great question. Basically, if you're the operator in terms of Tambaran B1 and you're looking to sell gas to whether it's Origin or to Inpex or Kogas in Korea or Santos in Darwin, you as the operator will want to sell the most amount of gas you can actually sell. And the buyer, mostly, unless they've got some restrictions in terms of capacity, which doesn't often apply, they'll want to buy the largest volume of gas they can buy. So going forward, we will probably get included in any future gas sales agreement. But, you know, there could be a situation where the buyer says, no, we only want 60% of the gas. We don't want 100%, or we want 77.5% of the gas. But, you know, as I said, that'd be an unusual situation. So we don't see, you know, getting our gas to market hasn't changed. And that's the big prize for anyone in the Beetaloo in terms of the market potential for Beetaloo gas is absolutely enormous. What is your assessment of Tambaran's operating ability compared with Origin? Look, they've just drilled a fantastic well in EP136, record time, I think about half the time of a previous well drilled to 3,000 meters. So that shows they got operating capability. I suspect a lot of the team at Origin in Brisbane, and this is the operating team, which we have, you know, I've known them for 8 years, fantastic group of people. I suspect some of those will end up with the Tambaran guys. So that will bring a lot of continuity in terms of, and then overall operational capability. We don't have any concerns at all about Tambaran's operating capability. Why is this deal a better deal than exercising the preemption? Also, can you speak to the funding cash position of Falcon going forward in the context of this new JOA and likely spend required? So why is it a better deal than exercising preemption? Well, we'll kind of never know the real answer to that because we're not doing the preemption. Preemption would have been quite challenging. I mean, apart from the time frame itself, we would have had to give up a lot. We would have had to dilute shareholders a lot. We were looking at bringing in a strategic partner because there's no way we were going to do be an operator at 100%. We were working closely with somebody else in Australia to come in as a partner alongside us. But we would never have the optionality we've created out of this deal. So when we started negotiation on this a little over a week ago, it became obvious that this was going to be by far the better route for Falcon and its shareholders. And then the second part of your question, the funding cash position, I think I touched on that in terms of, yes, we're still carried, not forever. We do have 17 million. We're getting a new carry. So our immediate need for cash is, you know, it's pretty limited. It's not like, as I said in another question, it's not like we're never going to have to raise money. We will, surely, but we have huge optionality. We're not under any pressure to raise money anytime soon. So we've actually moved ourselves into a really good position. I think one of the comments I got back, the most frequent comment, in fact, I got back when this deal with Origin and Tambaran was announced was, how can Falcon stay in the game? How can it protect its position in the Beetaloo? What with Sheffield coming in and H&P drilling and Tambaran coming in, how can we keep up? Well, I hope the previous Q&A have kind of addressed that concern, is that, you know, we can't keep up, but we don't have to, not all the time. We can choose to come in, to come out, to stay there, to stay on the fence, and so on. So it's actually put us in a really, really strong position. So the next one is to clarify, if a well comes in on a proration, Falcon chooses to sit it out. Falcon has the right to buy it back in. Yes, I think I've answered that. We do, but will we? Maybe, maybe not. I mean, instead of, you know, 2 or 3 or 4% buy back in might be expensive relative to what you're actually giving up in terms of the acreage. So you could just sit on that and then be ready to jump into the, you know, there's next 6,400 acres right bang next to the one that you didn't participate in. And it is such a tiny fraction of our overall 4.6 million acres. The next question, Origin made a big deal for selling out the issues of first generation people, and this was backed up by supporting comments by them. The ingression, I'm not sure I understand that question. I think I'll have to pass on that question. Apologies for that. Have you any thoughts on the time scale when Falcon Oil and Gas will be sold? Yeah, look, as I think I alluded to earlier, the exit strategy is firmly taken off the table. We don't need to sell. We're not looking to sell. We're now better off staying in this for longer, much, much longer, seeing this developed up past pilot development and actually even into production. So the value creation that we can see with the option of putting in hard dollars or not, or a combination of, is such a huge shift in value creation for our shareholders that, look, we're not looking at an exit anytime soon. Next, is there a particular well cost or a flow rate at which Falcon wants to see before participating in a unit? That's an interesting question, but look, you're not going to sit back. That's like having, you know, 20/20 rear vision in what, you know, particularly flow rate. But let's take a scenario where, you know, these wells that we're currently drilling, and let's not forget the most important ones are the ones we're drilling. We're looking to get a flow rate here of 3 million scuffs of gas a day, 3,000 MCF for a 1,000 meter horizontal, and we want to do that twice. They're the kind of rates that make Beetaloo wells in the Amungi, and certainly the Amungi member shale, B shale, really, really commercial. So if that's an answer to your question, you want to see 3,000 meter well producing 10,000 MCF of gas a day. In terms of the well costs, yeah, look, the well costs are going to keep coming down. But even at the current well costs, that kind of flow rate, given particularly the commodity prices, they would be commercial. So you would certainly want to consider participating in wells that are going to come in at 10 million a day. Why wouldn't you? Philip, what do you see happening to the Falcon share price over the next 18 months? And I can't answer. Well, I can have a guess, but I mean, it's really up to the market. Given where we were to where we can go in the next 18 months, I could see an absolute explosion in our share price. I mean, these 2 wells alone that we're starting drilling on in the next couple of weeks, and the results we'll have out in Q1 next year, I think could be hugely material impact on our share price. And then you bring in the US drilling rigs, you get a much greater activity going forward in 23. And then, you know, you get this success out of that, we'll be a very, very different company in 18 months' time. And then, is there a chance of production from these wells and therefore cash flow in 23? Yeah, look, one of the things we're all focused on is not just drilling for drilling's sake, not flowing gas for flowing gas sake, but actually commercializing flow of gas. So not only are we very close to the highway where we're drilling these wells, we're also close to a small pipeline that can take small scale production. So you could actually see, you know, cash flow. It's not going to be very material cash flow, but more importantly, you're going to see commercial production. You know, if it's not by the end of 23, certainly you'd like to see it somewhere in 2024 that we do have commercial production, even if it's only at a small rate. It won't be material in the cash flow. It's not going to be paying out dividends to shareholders. It's not going to be paying our way into the future. But more importantly is just demonstrating commercial sales of gas but from the Beetaloo in the shortest time frame possible. And Tambaran are very, very aligned on this, as are Sheffield, and certainly so too is Falcon. And I think that is the end of that's the end of the questions I see on my screen.
Philip, absolutely. And thank you very much indeed for taking the time to address all of those questions that came in from investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended for you to review and then publish any responses where it's appropriate to do so. Philip, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Yeah, I guess the main comment I have is, look, letter of intent, it's fantastic. It is terrific news for the shareholders. But the real focus has now got to be on the drilling. And as I said, that starts in a few weeks' time. And the results of those that we're very, very confident on. I mean, we really are. I mean, we're very confident these wells will produce the kind of flow rates that we're hoping of 3,000 MCF and even better. But 3,000 is kind of the hurdle. You might hear other people talk about 5,000 MCF a day. But at 3,000 MCF a day, we're then moving towards pilot development in 2023. And I think that's the thing to take from all of this, that, we are, with this drilling, we can move into pilot development. And with this LOI now signed, Falcon can be in this for the long term, all the way through and beyond, in fact, pilot development. So it's a pretty good day for all.
Philip, that's great. And thank you once again for taking the time to update investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Falcon Oil and Gas Limited, we would like to thank you for attending today's presentation. That now concludes today's session. So good morning to you all.
Good morning and thank you.